Sonal Varma, Managing Director and Chief Economist, India and Asia ex-Japan. Here's what she had to say about the tariff war that is likely to play out.
So I think the direct impact is probably easier to estimate, given India exports about 2.2% of its GDP to the US. So we know that there's probably a 20 to 30 basis point kind of a direct impact. But I think this is much bigger than that, and that is where the concern really is. It's really the weaker global demand, uncertainty weighing on investments, tighter financial conditions, which basically feed back into weaker business investment and also hurting consumer demand because of the negative wealth effect. And actually, the second round effects are extremely difficult to quantify and are still playing out as we speak. So our growth projection for FY26 is at the low end of consensus. We think growth will be softer the ongoing financial year at 6% on a year-over-year basis. But we do see downside risk even to this projection. And globally, Neeraj, we've cut our numbers more significantly for other open economies in Asia, and for the US as well. We've downgraded our growth numbers for 2025.
That was going to be my next question, that would you reckon that global growth at large, as it stands, takes a significant cut on current scenario? And does that, Sonal, change meaningfully? Let's say growth for the ASEAN region, does it change meaningfully if economies are able to strike some kind of a deal with Donald Trump? Because everybody from, at least in Asia and Australasia, maybe, Australia, Japan, Vietnam, all of them are on record saying that they want to go to the US, talk to Donald Trump and try and reach a deal.
That's right. I think outside of China and EU, at least most of Asian countries are looking to negotiate with the US rather than retaliate. And this negotiation is either in the form of lower tariffs, more investment in the US, buying more of US goods. So a lot of countries are offering that. The question is, the reciprocal tariff is actually not just about lowering tariffs. And for instance, the VAT or the GST that countries charge this is an important source of fiscal revenue for these countries. And therefore, it'll be very difficult to negotiate on the GST rate, for instance. Similarly, the tariff on politically sensitive sectors like agriculture is potentially non-negotiable in a number of countries. So I think it is possible that some countries do manage to negotiate their tariffs slightly lower going forward. But even countries that actually have basically an FTA with the US have been slapped with a 10% tariff. So the extent of rollback on tariff is possible, but may not be very substantial. And therefore, our assumption for the US is that US effective tariff rate on its import will be above 20% this year. And if the US wants companies to invest in the US, then they will likely keep tariffs high for some time. So the tariff rates will also be sticky. So some rollback is possible, but I think, it may not be very substantial is what I'm saying. Now, what it means in terms of global growth, nevertheless, is that the tariff shock is quite significant, both directly as well as indirectly through the various channels that we discussed. Particularly for the US, it is a stagflationary shock, and we have cut our growth projections for 2025 for the US. So on a Q4 over Q4 basis, we've cut our numbers to 0.5% down from about 1.4%, so nearly a percentage points drop. For rest of the world, it's more of a negative growth shock as well. So for Europe, Euro area and Japan, we've cut our numbers by 0.2 percentage points. And Asia, we think, will be hit the hardest because this is basically home to the open economies in the region, and the tariff rates on Southeast Asia are quite elevated at between 35 to 50%. So the growth impact will be quite substantial for countries like Vietnam, Thailand, Singapore, Korea, Taiwan. So we've made cuts anywhere between 0.3 to 0.6 percentage points across countries.